Hello everyone. Last night US market was fairly stable positive, but during that time our gift nifty was very negative and volatile. So in this video let's look at those first and then we can discuss our regular pre-market report for today 24th April 2025 for the Indian stock market in terms of Nifty and Bank Nifty. As we know, yesterday Nifty closed at 24,282, but just before the 5 minutes of closing it was trading at 24,325. Here ignore the last 5 minutes trade, it's just due to profit booking. Now at the same time gift nifty traded at 24,300 mark, which means the present day nifty is trading at a premium of 25 to 30 points to future nifty, which set to expire next week. According to me, this is the huge alarm to the strength of the rally. I mean, based on my experience in the last 2.5 years, most of the day, almost every session, I'm analyzing Nifty for the pre-market video. And based on that experience, this type of premium to present Nifty only happened during the market crash. Since the traders who shorted the present market will book the profit, so that will provide some support to the fall. But for the future one, there won't be significant buyers, which in turn made them to be available at the discounted premium. So that is what happening now. There is not significant buyers for the gift nifty or for nifty futures for the April month expiry. Here please note, I'm not saying nifty will fall from the present level. I don't know that. Anything can happen in the stock market. I don't think anybody can predict it. And certainly I am not. So please don't take trade based on this, and I can be completely wrong. Rather, my point is at present in the market, there is a significant less bias for the next week monthly expiry than the present bias strength. Then another interesting factor is if you see the May month gift nifty expiry, yesterday at the time of closing it traded at 24,445, which means it got 140 points premium with the April month expiry, which is completely normal as we got 34 days to that expiry. So May month expiry is the decent premium. But for some reason, April month expiry is at discounted premium. So during the trading time today and Monday, please have an eye out on the gift nifty premium, and I think potentially this will limit the upside movement. Again, disclaimer, please don't take trade based on this as I could be completely wrong. And also, for example, if tonight US and China or US and India or even US and Europe announcing the trade deal, that could change the global momentum crazy positive. At those time, market could rally to 25,000 mark, and that is certainly possible. So please take this as a pinch of salt. Based on the premium, it appears at present buyers have little doubt on the rally to continue next week, but that's not true for May month expiry. Now coming to the next issue, why it was negative last night and very much volatile despite global momentum was okay. I mean, it could be due to three reasons. One, in the last video, we discussed about the conflict escalation in Kashmir. As a retaliation to that, yesterday evening, Indian government suspended the 1960 Indus Valley Treaty, which India signed with Pakistan with the involvement of the World Bank. I mean, out of 5 rivers, 3 rivers originates from India, 2 from China. The agreement is to share those 3 river water with Pakistan, and those 3 rivers are the water source for all important cities like Karachi and Lahore, etc. In addition to this treaty suspension, India recalled the Indian diplomats from Pakistan and asked the Pakistan diplomats to leave India as well. So gift nifty might be reacting to this further escalation of issue with Pakistan. To be frank, I want India to take further harder measure since suspending the 1960 treaty paper is not going to stop the natural water flow. I am truly sorry for those affected, but as I said earlier, I want India to take further harder measure in a way like how Israel reacted for their incident. So the offender has to be afraid to make the same mistake again. Anyway, back to the stock market. Then the second reason could be yesterday evening both our finance secretary and World Bank gave the warning that this Trump tariff can reduce the India's GDP growth rate up to 0.5%. And finally, the third reason, which I think predominant one, yesterday in the aftermarket hours, RBI released their last MPC meeting minutes. And in that, all 6 members unanimously voted to reduce the interest rate by 25 basis points and shifted its stance from neutral to accommodative, which is positive. However, the committee also acknowledged the growing external risks such as uncertainties around US tariff, which could impact India's economic outlook and inflation. So possibly market might take this as negative since there is no indication of further rate cut. Hence, either way, because of these three negative news, I guess GIFT Nifty was negative last night. However, now after the US market close early morning today, it trimmed some of its loss and traded at 24,267, equating that with the Indian spot market. For now, it's indicating the flat to gap down opening of around 30 points. Then coming to US market, again on the expectation of trade war de-escalation between US and China, for the second day in a row, US market closed significantly positive. Dow Jones closed 1.07% positive, S&P 500 increased 1.67%, and Nasdaq was up by 2.5%. In case of VIX, it decreased 7% and dropped to 28.5 from above 30. Regarding Indian ADR, as it is, both banks closed significantly negative. ICICI Bank ADR was down around 2.5%. HDFC Bank ADR was down near 4%, but both IT stocks increased 2%. However, because in Indian market yesterday, IT stocks increased above 3%, at present the arbitrage value indicating the negative bias. Similarly, for banking stocks, despite the negative closing, it's indicating the neutral opening. About institution, for the 6th day in a row, yesterday FI was net buyers. They net bought for 3,300 crore rupees. On the other hand, DA net sold for 1,250 crore rupees. Then regarding the participant-wise open interest analysis, in the index option market, proprietary traders reduced their positive stance from net 2.7% open interest to net 1.8% open interest on the bullish position. Similarly, FII holding net 0.7% open interest on the positive side, whereas on the other side, retail traders holding net 1.1% open interest on the bearish side. Either way, all of them having the net open interest position less than 2%, which means for now all betting on market to expire range bound, not any breakout. As a summary, for the second straight session in a row, US market closed positive. However, it was not transferred into GIFT Nifty or Indian ADR, so both of them indicating the potential gap down opening. Just for info, today is weekly expiry. About the things to look out, HUL, Axis Bank, SBI Life Insurance, Nestle, Adani Energy, Tech Mahindra and IEX are some of the major Indian companies' earnings results are scheduled released today. And in terms of macro, as far as I know, there is not much for during our market time, but only in the aftermarket hours, various US related data such as durable goods order, number of house sales data, and usual weekly job insurance claims data are some of the items we need to keep an eye out today. Coming to technical, Nifty opened near 200 points gap up, but after the initial hour, it gave up all its gains and dropped to 24,120. However, then it quickly recovered and remained higher throughout the session and finally closed at around 24,300. Thus, on the daily chart, Nifty formed a small bearish candle with a long lower shadow resembling a hanging man type pattern. This is a bearish reversal pattern, but confirmation is needed in today's session. On the positive side, Nifty traded near the upper line of the Bollinger Band by continuing the higher high higher low formation for the 7 consecutive sessions. In addition, RSI momentum indicator maintaining its upward move and MACD stayed well above the zero line with a positive crossover. Hence, going forward, if Nifty trades below 24,300, then it could push down it to 24,000 to 23,900 zone. On the higher side, resistance is at 24,450 to 24,500. In case of Bank Nifty, it opened 450 points gap up, however, underperformed Nifty, but still managed to defend the 55,000 mark and closed at 55,370. Thus, on the daily chart, Bank Nifty formed a long bearish candlestick pattern with a minor lower shadow, resembling a bearish belt hold like pattern. However, overall the trend remains strong with Bank Nifty trading above all key moving averages, with MACD still positive and RSI also positive but tilted downward. Hence, the support is at around 54,500 with key resistance at 55,600 mark. As per the weekly options data, the maximum call option openers was at 25,000 strike, followed by 24,500 and 24,300, with maximum new call option rating at 24,300 strike, and then 25,100 and 24,350. On the put side, the maximum openers was at 24,000 strike, followed by 24,200 and 23,500, with maximum new put option rating at 24,200 strike, and then 24,300 and 24,250. Thus, from options data, 25,000 is expected to remain the crucial resistance level with support at 24,000. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any invitation based on this, as not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.